When you think of a monopoly on Indian stock market, one name instantly comes to the mind: IRCTC. It's a government-backed giant, and for years we believed it has the perfect moat and untouchable footrest that guarantees its profit. After all, it seems to control everything about Indian railways. But what if that footrest is built on rented land? What if the same government that gives IRCTC its power is also the single biggest threat to its future? This is a critical risk hiding in plain sight that many investors overlook. Today, we expose what IRCTC's moat is truly made of and that one thing that could make it all disappear with a stroke of pen. So, where does IRCTC's power really come from? It's built on four main businesses, but not all of them are the footrest you might imagine. First, the crown jewel: internet ticketing. Here is the first myth: IRCTC isn't the only place to buy a train ticket online, but it owns the entire backend system. So whether you book ticket on its site or through apps like Paytm or Make My Trip, they all are just an agent paying IRCTC a fee. While ticketing only accounts of about 27.5% of its revenue, it is by far the most profitable segment with massive 80% plus profit margin. It's a cash printing machine. Second is catering. This is IRCTC's biggest business by revenue, making up over 45% of its income. It has the right to provide food on countless trains and at stations. As more trains are launched, this revenue grows. However, it's not a true monopoly. Private vendors are also licensed to operate, and it's much lower profit business than ticketing. Third, we have Rail Neer, the company's bottled water brand. With over 19 plants producing more than 1.7 million liters a day, it is the dominant brand you will find across the railway network. This gives it a captive market of millions of passengers. But again, it's not the only brand, as other approved water brands are also sold and its total exclusivity has been legally challenged. Finally, there is tourism. This includes tour package and hotel booking. In this area, the moat completely disappears. IRCTC is just a small fish in a huge ocean of private travel companies, making it the most competitive and weakest part of the business, even though the company aims for 15 to 18% of growth here. So you have this government backed dominance in ticketing, catering and water. It seems unbeatable, right? This is where the story takes a sharp turn. The surprising truth is that IRCTC's greatest strength is also its fatal flaw: its complete dependence on the government. A private company builds its moat with unique brand or technology. IRCTC's moat is built on government policy, and policy can change overnight. This isn't just a theory. In October 2021, the Ministry of Railway announced that IRCTC would have to share 50% of its convenience fee revenue. The stock crashed nearly 30% in a single morning. The government reversed the decision the very next day, but the warning shot has been fired. It proved that high margin profits investors rely on can be taken away by a single directive. This is the most important risk to understand. The government holds all the cards. It decides the convenience fee, the revenue sharing rules, and even whether the monopoly should exist at all. The castle, it turns out, stands on the rented land, and the landlord can change the lease whenever it wants. Now, it's not all doom and gloom. To be fair, there is a powerful growth engine that could drive the companies forward for years. The biggest is the massive expansion of Indian railways. The government is pouring money into modernizing the network, with over 160 Vande Bharat services already running and hundreds are planned. This is a direct growth catalyst for IRCTC, boosting both its high margin ticketing and catering revenue. IRCTC is also expanding its own capacity. It is planning to build 4 new rail near plants to meet the ever growing demand for water. The company is also working to grow its tourism business through new partnership, and it is developing its own digital payment services gateway that is called iPay, which could unlock new profit streams. So does IRCTC have a moat? Yes, it absolutely does. Its government granted monopoly in core railway services gives it an incredible advantage that it's nearly impossible to compete. The surprising truth is that this moat is not permanent. Its strength is entirely conditional on government's goodwill. The same hand that gives can also take away. For an investor, this means you are not just betting on company's performance. You are betting on continued support of the Ministry of Railway. So the real question isn't whether there is a moat. It's whether you are comfortable with the fact that government holds the only key to the drawbridge. What do you think about IRCTC's future? Is the government risk an acceptable part of the investment, or is it a deal breaker? Let me know your thoughts in the comment section, and please do subscribe the channel so we can reach 1000 subscribers. See you in the next video. Take care. Bye bye.